Welcome back to the Real Estate Huddle, and today we're going to be talking about what are the best loan options for first-time home buyers, and what's out there. What can you get? A lot of people think still that you need 20% down to buy a home, and we've got a special guest here. Caden Brown's here joining us. Welcome, Caden. Thank you for being here. Caden, you bought a couple homes, right, from us, and your first home experience. We just kind of want to trace back your story of how that went, and loved working with you and your family. When you guys bought your first home, you guys were kind of fresh out of school, basically, right? You'd been working for a little bit, but like just trying to squeeze into your first home. And options that were available to you were, some of them were grants, right? State options that were available. What option ultimately worked best for you guys that you went with?
Yeah, on the first one, so we ended up doing, we utilized the FHA loan, and then we also went through, I think it was CHFA is what they call it. And so it seemed like there was a couple, and correct me if I'm wrong, Landon, but it seemed like there was a couple of different options within CHFA. You could either elect to do like a down payment assistance, or there was, I don't know.
Silent second mortgage?
Yeah, something like that, which is the one we ended up doing.
Yep.
And so ironically enough, and I just remembered this as you started the introduction, but when we went to closing, this was bizarre, but the title handed us a check for $1,900 because there was a concession for the vapor barrier. And I could tell the lady was kind of frazzled. She's like, what's going on here? Because we didn't bring a check.
Giving you money to buy a house?
And that's what she said. She said, she's like, I've been doing this for like 20 years. She's like, this is the first time I've ever paid someone to buy a house.
That's crazy.
So,
well, and you're getting money back from your deposit too, from your earnest money deposit, because you guys probably only put 1,000 down, is my guess. That's kind of like the requirement on it.
Correct.
And your earnest money was probably like 4,000 or 5,000, something like that. And so you probably got some money back from the earnest deposit, and then the grant covered 4% of your down payment. So that's what a lot of people don't realize is like, there's money that the government is willing to give you for your down payment to cover up to 4% of your down payment with CHFA. Sure. And DPA is another one that is another Denver program that is very similar to that, where you can get up to 4% of your down payment covered. And so if cash on hand is your biggest issue that's stopping you from buying a house, like it shouldn't be, right? If you can come up with $1,000, you can buy a house, especially in this market, because we can negotiate on the closing costs with the seller and have the seller take care of those closing costs for you. But that $1,000 is really all you need to be able to buy nowadays. And the misnomer of 20% down or 10 or 5 like is just a misunderstanding by a lot of people. So, sure. So that's awesome that you guys were able to get in for $1,000. And I know we haven't had a ton of growth in the market since you guys purchased your townhouse. But you'll slowly see that equity, build. And these last 3 years have just been kind of an anomaly of stagnation in our market. And the good thing is in Colorado, when we have a recession, like a housing recession, usually we just go flat. We don't drop in value and go down the other way. So
I've been in the market where we lost 50% of the value of a single family home. So, and I had 2 homes at the time. So going flat is a lot easier. So
that could sting. Yeah.
Share with where was that, bro?
That was in the Midwest in Minnesota. So we had 2 different homes in 2008 that we had to sell, and we were underwater on both of them. So it was very, very expensive.
So 50% drop in that time during the Great Recession, right?
Yep.
And during that same time in our market, we dropped anywhere from 8 to 20% in Denver. So why do you think that is? Why did this market drop so little compared to other markets that dropped half their value or 3/4 of their value? If it's Orlando or Vegas, 3/4 of their value, like during that time in 4 years.
It's just supply and demand. And there were that many homes that were hitting the market and people subprime loans and stuff. But in Denver, there's just that many more people that want to move here because the economy is flourishing. So there's a lot more people coming in. Yeah. So
I think it's the economy more than anything.
It's our jobs market. It's the economy.
Yes.
It's the it's the recreational activity even. People are moving here for a ton of different reasons. There's a lot of factors that come into Colorado.
Right. I mean, you're in a market like Florida and Orlando, like those coastal cities, and most of your revenue comes from tourist dollars in a lot of those areas. What happens when discretionary spending goes to zero, right? During the Great Recession? Yeah. All of a sudden, your business is tanked, right? And the economy tanks and housing values tank. So when people can't get jobs, they can't buy houses for the most part. So that's like the interesting thing is we used to be an oil and gas town in the 80s, and we were very dependent on oil and gas. It was crazy.
Denver was?
Yeah.
Oh, I didn't know that.
We were cow town with oil and gas, like dependency. And then all of a sudden we branched out and had this big boom, right? Early 90s, it was very good to us. And then we've had a lot of tech companies move in. We've had healthcare, a ton of healthcare stuff. We have great retail. We've got great financial companies. Schwab is they're headquartered here now. We've just got some amazing diversity in economy and jobs market. And that's why our market is one of the safest markets to buy in. And during downturns, it just gets flat. And during upsides, we have a steady growth type market. Yeah. And so over time, our average has been right around 6% growth per year. And other markets, it's usually like 2 to 3% in the country is the growth, like on growth years, that's usually what they grow. And so that's what makes Denver so different, right? So like you guys bought, hang in there. 3 years of stagnation usually is followed by a little bit of an upswing in our market. And so that's what we should see, moving forward. But
especially with what rates are threatening to do, if they actually do this time what they actually say they're going to do, that appreciation will come back pretty quickly just because that pent up buyer demand is super high right now.
There's a lot of people on the sidelines waiting.
Yep. Definitely.
For sure.
Yep. And now fast forward 3 years, right? Your family size has grown a little bit. You guys had a second baby, right?
Yep. We doubled in size.
So, a little different family of 4 in a townhome compared to like
tight real
2
fast.
of you, right? When you bought, I guess you had,
no, we didn't have our first daughter yet. So
was
it was
she
just
pregnant?
me and Andrea. No, she wasn't pregnant
Okay.
either. Yep.
So it was still pre kids.
Yep.
So you literally have doubled your family. That's crazy.
Yeah.
So with that said, running out of a little bit of room, right? You guys needed some more space, and so you called me. We had a couple big conversations, right, about like the pros and cons of each move, whether you rent your place out and go out and buy a new place, or sell your place, right, and then go buy. Ultimately, like, what were some of the factors that helped you guys in the decision?
First and foremost, I would say you were the biggest factor in helping us figure that out. I'm sure you probably got sick of me calling you.
Not at all, man.
You had to talk me off the ledge a few different times. At the time, though, if you remember, there was a lot of other townhouses that were for sale in the community, and I think a portion of, or a big reason for that was there was a special assessment going on, so people were kind of feeling uneasy.
Yep.
And on top of that,
common thread right now in the
Is
market
it? Yeah.
with townhomes and condos. Yeah.
Man, not surprised. And with the insurance stuff where it's at, it's kind of weird. So that market kind of sounds like it's a little different than the single family stuff. But ultimately, I just didn't think that we were going to be able to turn it very quick. And I worried about that. And I also worried we probably could have broken even, I think.
Yep.
But there's a chance it would have had to sit on the market for multiple months, and it would have just not been super ideal. So fortunately, when we did buy, I think we had a 3.25% interest rate.
Yep.
And so it cash flows a little bit, not a lot, but it covers the mortgage. We make a couple $100 to put towards something that's going to go out eventually. But ultimately, I don't know that it's going to be a long-term hold for us necessarily, but I think kind of what you and I talked about at the time was just, hey, let's hold, let's let the storm kind of pass a little bit and then reassess a year or two down the road and see kind of where we're at. So the decision after talking to you seemed to be, pretty easy. And fortunately, you actually have experience. I think you said you own a couple of townhouses or condos. And so anyway, that was huge as well.
Yeah.
In the market right now, cash flow is pretty awesome. That's
Sure.
great.
Yeah, a lot of
the
people
fact that
aren't
you're
able to
cash
do
flowing
that.
right now that's incredible.
Yeah. Yeah. How did it work out as far as like how long did it sit as because you ultimately decision was you decided to rent your place out and then go buy another place to create some more space for you. How long did it sit on the rental market before you were able to get a render?
It was like 3 weeks, so it was pretty quick turn.
That's really
Yeah, we
good.
had like 6 different kind of couples walk through it, and ended up landing on a super sweet lady who lives there right now. Who's been awesome. It's been really
great.
good for us. So yeah,
That's awesome.
yeah.
Very cool. And felt like you got a fair amount as far as rent value compared to what your payment is. Like you're able to cover that pretty good.
I think so. I mean, it's always tough with comps, right? You never really know what fair market value is, but I think that we got, in fact, a little more than what I anticipated. So
That's good.
Yeah.
Cool.
Are you using a property manager at all, or is it just you guys?
No, it's just us.
Cool.
It's a small 2-bedroom, and being in the construction field, I've got quite a few connections. So I thought if something does go sideways, I can probably deal with it more efficiently than a property manager. So
That's great.
Yes.
knock on wood.
That
but-
helps with the
well,
cash flow for sure.
Yeah.
Sure.
Quick shout out to United Roofing, by the way. You guys are amazing. Like,
Oh, yeah.
Oh,
you've taken
yes.
care of so many of our clients. So we appreciate you, and you guys do good work. And so I remember a part of our conversation was capital gains and like, do you want to turn your homeowners, like the situation that you had, you know, with a little bit of equity that is not taxable, since you lived there and it was your principal residence, turning that into a taxable property. But with you guys, like, since you didn't have a ton of equity at the time, it didn't factor in as much, right? Whereas if you would have had 100 to 200,000 in equity, like some people do that went through like 2020, 2021, like now we're talking, okay, you're turning non-taxable like income into taxable, right? And obviously, like for all of our viewers, like talk to a CPA. We're not tax experts, but you know, we had that conversation as well to whether that made sense to do or not. And in your case, it made a ton of sense just because there's not a ton of equity there initially, right? But that could build later, right? If you hold that thing long term and you can afford to do that, then that can be a great asset for you, especially with a 3.25 interest rate.
For sure.
Which, by the way, is FHA, which is assumable, right?
Yes. Yeah.
So-
Which is something else we talked about too. When
Yeah.
if we do list, and maybe we never will, but if we do list it, we could potentially market it as that. So
Totally.
We did talk about that. Yeah.
Yep. So
Huge perk with FHA.
And-
Huge perk in a market like
And
this.
we know how to market them because some people just say it's an assumable loan and they won't give you any of the details. And some people are like 15 years into a 30-year mortgage and their assumable's like $200K on a mortgage for a house that's worth 600 is like a buyer has to come in with $400K cash to do it. It's like, no, we'll actually lay out the details because
Yeah.
it's a little frustrating. So just assumable isn't by
Yep.
itself. So
Totally.
sure.
Well, and we've learned nowadays as we list properties, right? We're marketing, we become better marketers, you know, and in the fact that everybody is looking and transitioning to the photos. They're all looking at pictures first, right? That is the number one thing that matters on listings. And so what we started doing is we started putting banner ads at the bottom of the lead photo. And there's no MLS violation with this. We can get away with it.
Yet.
So we could have a banner ad that
calling
says FHA assumable loan
Oh,
with
interesting.
this balance, right?
Uh-huh.
So then somebody can look at it and they can like it's going to hit them in the face when they look at your listing
Yeah.
and know that it's an FHA assumable loan that they can assume for 3.25%, right? And they only have to put this much down.
And even if they don't know what that means right off the bat, it probably at least triggers a response. To,
Triggers
hey, let me
questions.
talk to
Yep.
someone and see what this
Absolutely.
means.
Yep.
Yeah, absolutely.
So you got to put it right in their face so it's clear as day, right?
Sure.
If you do go to sell it. But that would be our strategy there, and that's helped a lot on a lot of our listings. And we've done that advertising concessions, you know, for 2-1 buy downs, which we'll get into in a little bit. And we've also done it with locations, right? Like with Scott's house, for example, right? It's backing to a park.
Sure.
So we've done a banner ad that says like backing to the park, and then the next picture is the drone shot looking down at the park. But the first picture is just the house with the banner, so they can't miss it.
Yeah.
So just little things like that we're trying to do to market homes more efficiently now, and just because the pictures matter more than anything else, and things just get lost in the remarks. I think that like 80% of buyers now aren't even reading the remarks, sadly, on a lot of the listings.
I know I
all
don't.
about the pictures.
Yeah, it is totally.
Yep.
75% of showing, like the actual showing, like the conversation within in the showing is
Yep.
like questions that are in the public remarks. I'm like, oh, you guys didn't read any of this.
Yeah.
Saw
Yep.
the pictures and that's it.
Yeah. Totally.
exactly.
Which is fine. That's our job. But like,
Yep.
listings right there in front of you.
Any cons? Because we've talked about the pros of what you've done so far. I would say cons to a CHFA loan. I guess the only con would be it's a little higher cost loan. Like the APR overall is a little higher cost. There's more fees involved with CHFA loans.
Well,
So
typically
being
you
aware of
have PMI with that as well.
Yep.
With FHA,
Private mortgage insurance.
yeah,
Yep.
private mortgage insurance, and the CHFA stuff as well. I think DPA probably has that as well. Most things, and I guess it depends on your down payment, but
Yep.
most
So-
of those are used by first-time home buyers.
Yeah, but your killer interest rate trumps that. Right?
Yeah.
You more than like offset that with the cost of a CHFA loan, but it tends to be like 3/8 to a half a point higher APR, meaning like AP like your average percentage yield shows like the mortgage rate, but then the average like the APR shows the whole cost of the loan. So you always want to look at both when you're buying a house. Pay attention to both numbers because that number can tell you how expensive that loan is and how many fees are involved with that loan. So that's just one thing to spot as far as a con goes. But I would say Any cons to not having a property manager? Like, was it hard on your end as a busy, like, person that's got a business going and stuff, like to get a tenant and show the house and all that stuff?
Yeah, I mean, nothing super crazy. We did have to replace the water heater within the first like 3 months, which was kind of a kick to the stomach because I was like hoping we could at least get through a year. And the townhouse is older; it was built in the 70s, and a lot of the appliances and stuff are getting up there, so it wasn't a shock. But we did have some issues with the water heater that we powered through. So yeah, nothing huge. I mean, it is. I think, and I know like Dave Ramsey talks about this a lot, but it's like, I think people try to label it as passive income, and surely to a certain extent it definitely is, but it's also, there is like a certain aspect. Maybe I don't sleep quite as well at night knowing that, hey, I'm responsible for this person who lives, 45 minutes away.
Totally.
If something goes sideways, I got to pick up my phone at 3 a.m. So that is one thing. If it did cash flow a little higher, I potentially would justify getting a property manager.
Yep.
But overall, it hasn't been a huge deal by any means. And the lady that we have is a sweetheart. So
Good.
she's been super, easygoing and accommodating with getting the contractors in there and stuff. So
I know this is kind of a side question, off topic a little bit. Do you have like a home warranty on the townhouse?
we do not.
No. Okay.
Yeah.
Just wondering, because like that makes those repairs sometimes, like for water heaters and furnaces and stuff like that, a lot more bearable.
And it gives you a buffer. It's someone else to call first.
However, being in your
Interesting.
field, you're probably like, I got some connections.
Yeah.
Potentially. I should look into that, man. If I called a warranty company, though, they'd probably look at this and think Fred Flintstone designed the AC unit. That thing is like, yeah, dude, that thing's pretty old.
Well,
so I don't know that they'd touch any of the appliances, but I should look into it.
The only reason I asked, I have a home warranty on my house, with 210 home warranty. They're awesome. My furnace went out like 2 days before the coldest day last year. No, 2 years ago. And they came out and they gave me a $10,000 furnace. I paid $1,000 for it.
That's awesome.
That's crazy.
That's killer.
awesome.
So just it would have been $500 had it not been the second time they came out and serviced it.
Got it.
So
That's pretty good.
And for $750 a year,
Yeah.
it makes I'm in every time.
Well, in a lot of those home warranties, if you read the language, like the bylaws, they'll say like there's a max out of pocket for the home warranty company of like $3,000.
Yeah.
So the fact that they had a higher max out of pocket for you was big. That's
awesome.
huge.
I'll have to get the name of that from you when we're done.
I got you.
Yeah, I'll look
Yep.
into that for
That's
sure.
cool.
Yeah.
The other kind of in and out that might be interesting for our listeners is like if say you would have done this and just tried to like buy a house first and then go buy a rental property later, right? You would have been an investor buying that rental property, and it would have been about 0.3% higher interest as an investor to do it rather than being an owner occupant. And so you pay a little more of a premium as an investor because it's a higher risk loan for the lender. But since you were an owner occupant and then it got converted into a rental, you never have to change your rate, right? It's fixed because that's what the lender promises, fixed for 30 years.
Sure.
And so that's another advantage to like buying and then converting it to a rental within like 2 to 3 years. Usually that's going to be a win. If you can handle it financially to be able to do that, it's awesome. And you've got growing income, as you've kicked off your career here, which has been great, So next step, the next buy, what were your thoughts and like, what was enticing to you as far as like what you wanted to get into next after living in a 1970s townhouse?
Yeah. I mean, space was obviously the biggest factor, and we went down a few different rabbit holes. I'm always looking for deals, and so if space was obviously the primary factor, and then I don't know if you remember, but when I started talking to you first originally, we started looking at trying to assume something.
Yeah.
And kind of ended up finding some websites and stuff that's out there where they kind of show the assumable loans on the MLS and whatnot. And the issue with that is we were prepared to come with like a 5% down payment, but a lot of those, like Brock said earlier, they just required so much down where an already limited amount of houses that were eligible are, we just had a tiny sliver of that would be eligible for us.
Yep.
And so we kind of started poking around with the new builds. And to be totally honest, I don't know if you guys see this, but I see a ton of like Instagram stuff with showing all these issues with these new builds. Yeah, a lot of I don't think it's in Colorado, fortunately.
Arizona side?
Yeah, the Psy guy or whatever. Yeah. So I was, super skeptical going into it. And my sister's bought a few of them over the years. And so we thought we'd go poke around in there. And the home values. So what was interesting is I remember going and talking to the sales rep over there, and the home values were out of what I thought was what we were going to be able to afford.
Yeah.
And then he started talking about interest rates, and he immediately said it's 4.5 fixed, which at the
Yeah.
time I think they were close to 7. And that was like, I was like scratching my head, like, how does that work? You know,
Yeah.
like this must be witchcraft or something, because I don't think this is,
Well, an
above
initial
water.
price point, you guys were thinking like 500, somewhere around there.
Yeah,
right?
like
Maybe
550. Yeah,
Yeah.
for sure. Which at the time, and even right now, well, it's probably a little more buying power right now. But I didn't feel like we were going to be able to get into something in an area that we wanted to for that.
Yeah.
And so, that made obviously a huge difference. And then when we kind of opened up the hood and started negotiating with them, we realized that was just the tip of the iceberg,
Yeah.
and that we ended up getting a lot more stuff out of it too.
They're pretty flexible.
And
Yeah.
D.R. Horton, I shout out to them. They've been great with every client I've worked with. I've done a few D.R. Hortons, and they're
Yeah.
a pretty quick builder, but they do a great job, and then they treat their customers pretty dang well
Yep.
comparatively.
Definitely.
I like them a lot.
Yeah.
They're great.
I agree. And they've kind of evolved over the years. You know, a lot of builders, they used to be dirt start builders, and now we have a lot of builders that have just switched to specs, meaning that they build a house and then they sell it, right? It's that simple. So they have a final finished product
move-in.
and then they sell it. Yep. And so with that said, it's once they have a finished product that they're sitting on money that they've borrowed as well, right? So they've got interest on their loans. They want this thing gone. So a lot of times once they built a home in a community like Looking Glass, you know, where you guys bought, and it's in Parker, great development.
It's a great place.
That's
Parker's a great place.
you know, that's an opportunity to get a good deal. And a lot of builders, like in the past, they haven't been willing to negotiate. Like the price is the price. And that's it. And depending on the market, like during the pandemic, they were raising the price every 2 weeks. And it was just kept going up and up and up. And it was so frustrating because you're like, we had qualified buyers and now they can't qualify because the price just went up because of all the demand. And now in this market, that's more of a buyer's market, you know, we're seeing some incredible things. So, do you remember some of the things that we were able to negotiate for you as far as the financials go on your place?
Yeah. So obviously the biggest thing was the fixed interest rate, which I think that comes regardless.
Yeah.
4.5% fixed at the time. And then, let's see, what was it? We got a 2-1 buy down on top of that.
Yep.
And, which was incredible. So my interest rate right now is effectively 2.5% for the remainder of this year.
Yep.
And a little bit into next. And then,
So I'll explain real quick like how that works for listeners, right? Because you made 2-1 buy down just sounds confusing, but like if you're unfamiliar with that term, rates fixed for 30 years at 4.5, but year one they take 2% off the rate, right? Year two they take 1% off the rate. So it starts with a 2.5, then it's a 3.5 next year, and then it'll be a 4.5 thereon after, right? And so if rates dip below or you know below 4.5, then maybe you refinance, but chances are that 4.5 is going to look pretty good still in a couple of years, and you guys will keep that and just ride it out most likely. So that's pretty
well,
awesome.
and I would tell anyone too that's listening that the difference and I didn't realize this, but the difference between a 7% interest rate and a 4.5% interest rate was almost $100,000 of affordability for us. Not quite $100,000, but it was our purchase price was I think $635, and we were looking at houses for $550.
Yeah.
And so the difference that it makes in the monthly payment is astronomical.
And the type of house that you were looking at $535 compared to or $550 compared to $635, like what was that? What did that look like?
It is night and day. It's unbelievable. Yeah. In fact, if you remember, Landon, we put an offer in on it originally, and they accepted the offer like that. And I just kind of got cold feet the first time and started overthinking. I just told my wife, Andrea, I was like, I just don't know that this is the spot. I don't know that I feel good about it. And so we pulled back, and a week later, we went through a couple of open houses, and they were right kind of on the Parker Aurora line in that area. And we walked through a house, and I was in there for like 5 minutes, and I just told Andrew, I was like, I'm not going to do this. Like if this is what it looks like let's go rent, or let's, because I'm not going to, like, this doesn't feel like an upgrade to me.
Probably a 30-year home that hadn't been updated at all.
Hadn't been updated.
Or run down.
Yeah, for sure. Old. And it just, and that was a little further north than we wanted to be anyway. But anyway, ironically enough, it was about a 15-minute drive to get to where we ended up moving to.
Yep.
And I said, let's just go back through and walk through a couple of those other houses and see if we like any of those specs or feel good about them. And we went through, and I talked to the sales rep again, and he's like, dude, we haven't sold this thing. The DR's getting a little more desperate right now. We'll do a 2-1 buy down in addition to the 4.5% fixed. And so that, I can't remember where I was going with that, but anyway, night and day as far as, moving into this, it's like, I realize it's a track home, so nothing super crazy, but we've loved it. It's been awesome.
Yep.
I think that the build quality is definitely acceptable. I mean, it's not a custom home, but you're not paying for a custom home. So
Definitely. Well, and from 7 to 4.5, that's about $1,000 difference in your payment,
For
right?
sure.
And then the 2-1 buy down on top of that, that's like another $600 to $700. That wasn't a 6-7 remark, by the way. Like just I wasn't thinking that.
Yeah.
My kids would have made fun of me. But the like that's another huge savings. So we're talking like $1,600 to $1,700 different, right, than what it would have been at the market rate at the time.
for sure.
So
Crazy difference,
crazy different. Like what can you do with $1,700 a month, if you're not paying that in interest, just wasting it for the lender.
Were you wanting to be in Parker as well?
We were looking heavily in Castle Rock for a little bit, and then originally I didn't want to be in Parker, and there was nothing against Parker. I didn't see us being there, and but anyway, a lot of the new build stuff right now is going on in Parker. Castle Rock's got some, and Aurora's got some, but Parker, at least at the time, this community that we live in was really building out, and so that's why we ended up there. And I've loved
Lake
it,
Goss is great. It's an awesome location. It's
Yeah.
not bad.
We all know Spencer's a little biased to Parker, so.
I'm on the very east side of Parker, but yeah.
You're
it's
like Elbert County almost, or
not that far. Not that far. I'm where Legend High School is.
Yeah.
Yeah, I'm over there.
Okay,
in
cool.
Canterbury. So,
yeah.
but
Oh, that's great.
it's just nice to have another person in Parker.
Yeah, it's where the
So
cool
much better than
where the
Islands
cool kids
So
go
much
hang
better
out.
than Islands, right? It's nice to have a buddy here.
I'm
That's
being
in Parker.
so nice right now because Caden's here. I'm just kidding.
Tilly's just biting his tongue, dude. He's trying not to talk smack on our town.
It's our common rivalry.
Yeah.
Highlands Ranch versus Parker.
I don't know what our team colors are, but we believe that, whatever it is.
Yeah,
So,
yeah. We bleed Parker colors.
No, it's a good spot. That is.
Sure.
It's a good spot.
Yeah.
Well, that's awesome. Appreciate you sharing your experience with us and for the audience, like thinking through, like I'm sure we have a lot of listeners that are kind of debating the same questions and the same lifetime like happenings, right? That are happening where they're running out of space, maybe in their house, needing some more space, but they don't want to leave an interest rate. And so it's good to know what options are out there to still do that, right? And succeed with that.
Also got additional things, so you had landscaping and blinds and a few other things at the purchase price, so.
Yeah.
Did they give you
I
landscaping?
forgot to talk about that, dude. We got, man, Landon, help me remember. So we got their move-in package.
Yep.
This is on top of the interest rate stuff. Like we're blown
Yeah.
away at this point that they're willing to offer this.
Which
But
included like a smart thermostat, right?
yeah, which
And
that comes, I think, that comes
blinds.
spec with all the
Did they give you a refrigerator?
They gave us a
Did
refrigerator.
they give you a washer and dryer?
Washer and dryer was included. Yep.
How about backyard?
That's a win already.
Backyard, yes. The only thing we had to do in the backyard is per the HOA. We had to plant a few trees, which I guess just got done a couple weeks ago with. But that was the only thing that we had to do. And what's interesting is people that live in DR homes that purchased like 2 years ago, they had to pay for their backyards.
Yeah.
Which
Yeah, I was gonna say.
you wouldn't realize a backyard costs that
the
much,
perfect
but it's
market.
like pretty expensive to get
be like-
sprinklers and
yeah, like
saw.
30,
30 grand at
Yeah,
least.
I think on average
Yeah.
it's like 20 to like for an average size yard for like an 1/8 acre, it's like $20,000 to $40,000.
Yeah.
Depending on how
elaborate
nice
you
you
want
like
to
to make it.
go. Yeah,
For sure.
Which that's kind of one of the reasons why we tell people like be careful with new construction, right? 'Cause,
Yeah.
like you'll
There's
move in,
additional costs.
Yeah, you think you got your costs figured out, and then you got blinds, you got the washer,
It's still
the
a project.
dryer, the
It's still a
refrigerator.
project.
Yeah. So all that stuff that you got, like,
Did they give you the light fixtures in all the rooms?
They did.
Okay.
Remember I was joking with you. They have these sliding light fixtures, and you kept telling me, "Man, how cool those are." And I was like, "Oh, I'll rest my head on that when I'm paying my big mortgage every month. I'll think about how cool these light fixtures
They have
are."
well, the switches.
They're the
I
big,
love,
thick ones?
Yeah,
I
you
love
can-
the switches. The
Yeah.
like clicky. They're just so much better than the little
switches, yeah.
tiny ones that you have to like have great like
Yeah.
hand-eye coordination
Dexterity.
to get. Yeah, the dexterity.
Dexterity of
I
these
can
light
just go
switches is
smack,
insane.
smack the wall, and it's on or off. Like,
It's a needle mover for Landon.
it really is.
Yeah.
The clicking sounds were like it's like Pavlov's dog. for
Way to
me,
go,
man.
dude.
It
Yeah.
was-
I'm
Way
thinking
to
birthday
go.
presents. We got
We'll switch out all the switches.
upgraded
Hey, we brought
switches.
you an electrician, Landon.
For
Happy
real.
birthday.
Yeah.
Yeah.
No, and he said they patented it too. Like that technology.
Yeah.
Like someone just is making a ton of
DR?
money off of those. Yeah.
Oh, or just in
So
general.
that electrician or the company that made those.
Now
Like,
I'm gonna have to see these things. This sounds
Yeah,
this
dude,
sounds
they're
big deal.
They're pretty cool. You can allegedly, I haven't tried it, but you can like switch them, like mix and match them. So some of them have dimmers and stuff. I've got a little too much on my plate to mess around with that.
Yeah.
If you ever want to come over, I
get
know
there.
you're a big light guy, so if you ever want to come over and
program the whole thing for you. Yeah.
and
Big into that.
and
let me
ride the
come see my
lightning,
switches.
right? Yeah.
The thing is, you better hope that your kids aren't as into it as I am. They're gonna be just like
Yeah.
clicking it left and right.
I know. That's super funny. One thing I did forget that we did have to pay for that I'll mention is the fencing. But that was the only other thing that we had to pay for. Privacy fencing. Anyway, I didn't want to forget that. But
Yeah.
Did you split it with your neighbor, or did you just do it up front?
we did. No, we split it both. My neighbors are super cool. So it was seamless. We had the same company that DR uses because they had put our back fence in and our front
So
stub
like
out
a
fences.
5 or 6 foot privacy per HOA? Or
Yeah,
was it a
it's
split
taller than me,
Okay.
and I'm every bit of 6'5", as you can tell. So no, I'm 5'9". It's over my head, so it's probably 6,
gotta be
6.5.
Yeah.
That's awesome though, because
That's great.
A lot of these, like it's expensive to do, but I get that all the time from clients. Like, I don't like the split rail.
Yeah.
I want that privacy fence.
And that was huge. And I would tell anyone that was, believe it or not, that was actually a factor for me. I told Andrew, I was like, look, I want the big fence.
Yeah.
I want to be able to let my kids go and not have
It's
to
a
worry
big
about
one.
it. So
It's a really big one.
Yeah.
and the yards too are a little bigger than in Looking Glass than they are in other communities, which is kind of interesting because
Yeah.
we went and looked at like Crowfoot,
Yeah.
whatever, and all of that. I think most of that split rail out there.
I
If
feel like
remember correctly.
they front load the house a little bit closer to the road, so you got a little bit more backyard.
Yeah,
there.
I feel like
Which
the
is
backyard
nice.
was decent. Yeah,
Yeah.
you had a good sized backyard.
True.
Yours slopes a little bit, right? You got a little bit of a hill, but it's
Yeah.
still decent, and it ended up after they did the backyard, it ended up being less than what you thought it was going to be, right? When it was pre-done.
Yeah, when it looked a lot steeper originally. So I mean,
Kinda
it is.
regrade it.
Yeah, it is.
Yeah.
It is still steep. Like we'll never be able to have a trampoline, unfortunately, for my kids. But I
Yeah.
guess that's
Yeah.
fine. For now.
Mini tramp. Get the mini tramp.
There
Well,
we
you'll
go.
save
Yeah.
on medical bills.
Yeah,
I was gonna say, I think
Insurance
homeowners
deductible.
insurance goes up, doesn't it? If you have a tramp, so
Totally. Yeah.
money saver right there. Yeah.
Trampoline park in Aurora. Park
Yeah,
or-
you've got
right.
plenty of parts.
They can get their fix over there.
right,
Yeah. We got all sorts of stuff in
Spider
Parker.
monkey,
Yeah.
right?
Yeah.
It's right there. So, can you tell us a little bit about like D.R. Horton didn't offer you a bigger discount if you didn't have an agent that you were working with, correct?
No,
never
they
did
did not. It was the same. So in my understanding too, and correct me if I'm wrong, but those are different funds, I think.
The
right?
color of that money is different.
Yeah, it's not. I don't think that you can take that money and negotiate and say, "Hey, I'm not going to use an agent. Give me another whatever amount off."
Yep.
And so yeah, that was in the sales rep too originally, because that was one question that I asked him. I still would have used you regardless.
Yeah.
Don't worry. But I
I'd like
did
to know all the information.
I know.
I
was,
get it.
I was going in head first to this thing, but he said, yeah, he's like, that's not really a factor. And he recommended it too. And obviously we had worked with you before, and so it was a no brainer.
Yeah.
Just having you like walk through the process, because one thing I think, maybe a lot of people that buy these new builds don't realize is like, you don't really have anyone to represent you. Even the sales rep, you kind of think he's on your side. And when I say sales rep, I mean the guy who works for the builder.
Yeah.
He's not really on your side.
Yeah.
He's paid and employed by the builder. So.
Yeah,
Pat just wants to
exactly.
get the deal done.
Yeah.
So
He,
that,
he just wants to push it
I've worked
through.
with Pat.
You know?
yeah,
Pat's
yeah.
great.
Yeah,
a
he's
good
a cool guy. I love
He's a
Pat.
good guy.
Yeah,
But their
absolutely.
contracts are so protective of the builder.
correct.
They have no favor for the buyer.
For sure. And I don't necessarily say that in a negative light. I mean, I think Pat
That's how
did
it
his
goes.
job to a T, but it's just, you got to know, I mean, who's,
Yeah.
That's why it's
what
still,
team they're on, you know?
And this is not like to say you need us, but you kind of do, like even more so with new builds, just because of how protective they are of their builder. It's a very builder favorable contract, and it's good to have representation there so you can
Yep.
filter through some of that stuff.
Well, I
Because they're still salesmen at the end of the day.
Yeah, absolutely. And like, I think my experience was, or my impression was, that you didn't realize all the things that we could ask for, right? And that we could go for
I
until
had
we had
no
that
clue.
conversation, kind of strategize, and then we were able to come up with a plan and ask for a little more. We asked for a discount on the price too, right? And so, a lot of buyers, I think, with new construction, especially, they walk through a model and they get kind of enamored by it and think like, oh, this is like super good quality. It's amazing. And then they kind of feel bad like asking for anything, but unless they have an agent that's like pushing them to do it,
Sure.
And
And home builders built a culture for the longest time of like sticker price. That sticker doesn't come off.
yeah, they have.
So now they're in a market where we're kind of
Yeah.
hurting. We need to move these.
Yep.
And then on top of that, they can't build enough to
Yeah.
maintain national inventory.
Right.
And so they're like, all right, let's move this. Let's get going. Bring us an offer.
Yeah.
I've had multiple people within the past 2 years multiple builders say, well, yeah, bring us an offer. I'm
Yeah.
like, that's insane.
Totally.
For a brand new house?
Yeah. And they've
We'll
just,
bring you an offer?
builders have just hired sales reps that just tell people no all the time.
Yeah.
Like, and now they're finally having to adjust and
They
like,
have to.
They have to give a little bit and be willing to deal. And that's the only way they're selling these. So
Yeah.
that's the good news right now. And it's a unique time. It's not going to last forever too. I know like people think, oh, it's such a sales pitch. Like buy now before rates come down or what. It's like,
But
you
that
guys don't
commission check
understand.
could get me out of
Yeah.
a few
Like,
jams.
We were all saying during the pandemic time, like, guys, rates aren't going to last like this forever. And everyone was like, oh, whatever. We've had low rates for 10 years. And then all of a sudden, our rates are up here now, right? But it's like now, like, this kind of buyer's market is not going to last forever.
No
And
one ever listens.
We
to
still
us.
get people that are rolling our eyes and
Yeah.
just think, like, whatever. It's like, okay, you're still going to be waiting and on the fence in 10 years and
I
renting,
will say
you know?
the past predictions of rates dropping for the past 2 to 3 years that I've made have not come true, and I apologize for that. But I think actually it's going to happen this time.
You were listening to economists.
He really means it. He didn't mean it the first time. He
This
means
time
it
it's
now.
real.
Yeah.
This time, it sure feels like it, right?
Where's the magic 8 ball? I think that's
Got that
the-
special
So bad.
feeling. Yeah.
What we thought was going to happen never happened.
But-
There's a couple factors in there, but
We've come from 7.25 to about 6.25, so we've dropped a point in the last 3 months. So
Yeah.
that's been
We're starting to
promising.
see the
We're starting
slow
to-
trickle.
Yeah, and it's not like such a tease where it's like down and then whoa, here we go, back up.
Yeah.
Like it's been pretty gradual with the little bumps in the road, but it's getting there. So I think we're
Yeah.
going to see stuff in the 5s consistently here pretty soon, and hopefully by the end of the year, that'd be great.
Well, I think right now, potentially, you guys know way more about this than I do, but I think it might even be a better time than when we bought because I looked at the Zillow price of a house that sold that had one more bedroom than we did, our
Yeah.
exact same, like the exterior looks identical,
Yep.
and it sold for 10 grand less than what we paid.
Yeah.
And so I think that,
I agree.
And I don't know. I
Yep.
think it's an excellent time. But,
I agree.
so-
Yeah, just the time
Right.
of year too, leading into the holidays.
Yeah.
Like builders and sellers right now just get very motivated to get stuff done.
this is like it's such a sweet spot if you think about it, because we have rates that are starting to make that trickle with the holiday season lull, if you want to call it that. It's just like this soft spot.
Yeah, the holiday season and then the winter on top of it, right? Most people don't want to move in the
The
winter.
yearly
so
seasonality
you can
with
get in.
this whole like rates, whatever you want to call it, seasonality or like threat to finally go down. It's like I don't know if there's much better than right now before rates drop and with nobody showing homes or buying right now.
Yeah.
It's pretty awesome.
From a motivated
People
seller
are,
standpoint.
sellers are so motivated,
Yep.
and builders are so motivated. It's
Yep.
just a solid time.
Yep, it is definitely. Well, awesome. And I think the only thing we didn't really uncover was you were like, how on earth do they do this with the low fixed rate? Like, that's crazy. How do they, that's like, it seems like magic or something.
Yeah.
Like the way that they do that, right, is they bulk buy like huge amounts of money, like say $50 million, right, from a builder that's buying that rate down with a lender and saying, we'll pay this much, right, to buy that rate down. And that's how they do it. It's just a big bulk buy. And since they do so much volume, that's how they can get that low fixed rate for so many people.
Yeah.
And so,
Well, then Pat said too, once that chunk of money's gone, they have to do it again. But that
Yep.
doesn't mean the next chunk of money is going to be at the same interest rate the
Correct.
last chunk of money was.
Yeah.
And so
Yep.
I think that it is a little important to like be aware. Like I think that right there is reason enough. Like if you're thinking about it, probably jump on it.
Yeah.
You know.
Yep.
And because
Great
that's
advice.
one thing he kept saying is,
100%.
hey, look, we don't know when this money's going to expire, but when it does or when it's all used up, like
Yep.
you might be SOL. So.
Definitely. Yeah. Well, and I just respect you a ton because you're one of those like the best examples that I've seen of doing your due diligence. Right. You're really like inquisitive and trying to find out as much information as possible so that you can make the best decision. And I would say it's like you're extremely diligent and finding out all the information without like a ton of bias either. I felt like you were very like fair-minded about the process of just learning and trying to like seek information so that you could make the best decision. So a lot of people could learn from that.
Oh man, we appreciate you saying that. Andrew, I think, wants to kill me sometimes because I think I get a little bit too much in the weeds sometimes. But
Blessing and a curse.
yeah,
Pays off though. Yeah, congrats on the successful transaction, man. That's awesome.
Yeah.
Like,
thanks, man.
yeah,
Yeah,
you-
absolutely.
yeah, got a good deal.
Yeah, I would like to just shout out one thing I did feel bad for was Alan Crockett is who we were originally going to use. Alan
Yeah,
is
with Fairway.
phenomenal.
Yep.
He is absolutely awesome. We used him on the first one, and he helped field my phone calls for like the following year as we were posturing because I'm a contract worker, and so just as far as getting the loan goes can be a little bit messy. You gotta kind of prepare for that a couple years in advance, but. I remember him saying, because I sent it over and I wanted to give him a shot at it, and when he saw the numbers of what the builders could do, like his draw even dropped.
Yeah.
He was like, "This is unbelievable." Like,
Yeah.
nobody on the pre-owned home market can touch this.
Yeah.
So
Yeah.
I'll second that shout out.
Yeah.
He's awesome.
He's
Yeah.
amazing. Yeah. And he's always willing to like talk through things with you. And he's got so many, like 30 plus years of experience in lending. So he knows all the ins and outs of every situation. And they've got lots of products to help too.
And
So,
nothing is a big deal to him.
Yeah.
It's so nice to talk to him.
So
'cause he's just so
mild-mannered.
logical.
It's like
He's
calming,
just
isn't it?
Yeah.
Yeah.
Like I'd want him to read me a story to go to bed.
yeah, I know.
He's got that
I used to
late
call him
night DJ voice.
just to unload my difficult day. Just have him read me a book
He's
at
a
night or
great
something.
listener.
yeah. He's awesome.
Yeah, he is
His
really
wife is
cool.
a very lucky woman.
Love Alan. Yeah.
I will
but
use him for sure in
to
the
your
future.
point, like you have to use the builder's lender to get those incentives, and sometimes it just is the only thing that makes sense, right? So totally get it. And Alan was great about understanding that as well. And,
He was
and so
awesome. Yep.
It's just one of those things, you want to do the right thing. You also have to look out for like a 30-year investment, right? You have to look out for your best, no pun intended, but interest, right? And for you and your family, and that's huge. So awesome.
Well, and that best interest saved him $100,000 almost.
Yeah.
Did,
It's
yeah,
big.
did, yeah.
And $1,700 a month currently. That's crazy.
That's awesome.
Pretty
That's
huge.
insane.
That used to be a payment.
And I got those sweet light switches, so let's not forget.
Let's all go have a light switch party.
Let's not overlook the
Mind blown.
switches,
We're going to need a video of this so we can put it in. So
That's awesome, man.
Yeah.
We'll have Jesse put an image up of those light switches.
There you go.
Yeah,
Yeah.
Diacono, that's what they're called. I think I hope I'm saying that right. Deakno, I think.
I just call them smack switches. You just smack them. Just smack the wall. That's all you got to worry about. Yeah. It's like a
How many switches do you go through?
it's
in
like a
year?
WWE move, man. Like smack.
He's going Karate Kid on it. So.
wax on, wax
Judo
off.
chop. All right. So if any of this has hit home, if you've been thinking about, contemplating buying your first place, how you're going to afford it, whether you should turn your place into a rental and go buy another place because you have needs that are coming into play over the last few years, definitely give us a call. Our info is below here. You can reach out on our number and we can talk you through your current situation and help you out just like we did Caden and his family and help you guys make a great choice so that you can have a great home first and also a great investment, that you'll enjoy for years to come. So appreciate you listening and we'll catch you on the next one.